Okay, here's a trade that we have just entered. This is Monday, June the 13th, 2011, and at E-mini Day Trader, we like to trade as our model account with 4 contracts, and we have entered this short trade at 1265.50. You can see our down red arrow showing the price 1265.50. And when the market came up, it just filled us just a minute ago. So, as you know, all of our trades are identified right to the tick, and have a maximum 6 tick stop, and are shown on the chart. This is a 1-minute chart. The trades will appear at the close of the 1-minute chart if the requirements have been met. And so the short that we have taken here at 1265.50 has an initial protective buy stop at 1267 even, which is 6 ticks or a point and a half above our short entry price. You can see our buy stop has a blue tag on it at the price of 1267, where it says 4 with buy S3. So that's just Ninja's way of identifying what that trade is. On the downside, you can see 3 green tags. They all say buy on them, and right beside buy it says T1, T2, and T3. These are 3 different targets that we have, and you can see also that just to the left of the buy T1, which is target 1, we have 2 contracts. Our market has just come down and reached it. So our stop has dropped from 67 even to 66.25. So now we're only risking 3 ticks on this trade. We have not yet been filled to buy back with a buy limit order at 64.75 at our first target. Let me just move this up here so you can see the time. You can see that this is my time here, which is West Coast time. So it's a little after 12:30 Eastern time is when we've entered this trade. Okay, we've got filled now. So now you can see that our buy stop had already adjusted, so there's no adjustment to be made on that. And should the market come down and hit 1264, then our protective buy stop would come down to our entry price. So should the market rally against us right now and lose 3 ticks, it would be equivalent to what we just made, which was 3 ticks. And both of those would be for 2 contracts, because we started out by selling 4. So our initial trade is to short the market. In other words, for those of you maybe not familiar with shorting, it just means that you're selling before you're buying. Most of the time we buy before we sell, but in the futures market it's just as easy to sell and then buy it back later at a lower price, and therefore you make the money when the market goes down. So we are hoping that the market will go down here. We're expecting it to. Our second objective is for 6 ticks or a point and a half. That's why you can see that T2 shows a price of 1264 even. And should the market dip down to 64 even, our protective buy stop, which is right now the red price, you can see that there at 66.25, that would reduce down or be lowered down to our entry price. So hopefully we can get filled on this, and I think the market does have some pretty good potential on the downside here. We were certainly more bearish on the market going into this week than bullish, and of course the market has in essence continued to sell off here. So market is certainly stronger on the short side over these past couple of weeks. So hopefully it can continue here, and we can okay, well, it's bouncing right now. Hopefully it won't bounce and stop us out, but we're just going to keep monitoring it here. So at E-mini Day Trader, this is our model size trading position, which is 4 contracts. Many of our traders trade a lot more than 4 contracts. Some of them just getting going will start with just 1 or 2. It's really a personal preference. There's nothing that says you have to trade 4 just because we trade 4. We do that in our model account because it gives us an opportunity to manage a position with multiple contracts. And there's various kinds of techniques that you can employ to maximize your profits when you are trading with multiple contracts. So um, that's why we go ahead and use the 4, so we can demonstrate some of our ideas on that. We do find, though, that over time, as our traders become more and more proficient, they will actually then go ahead and sort of devise their own type of trade management expertise. And the more you do this, the more you get better at it, and to the point, hopefully, where you are becoming an expert trader and know exactly where and at what price that you want to enter the market. So um, uh, the other thing that I was just talking to one of our members, our brand new members, and he was asking, well, how many contracts can I trade with a $10,000 account? And with a $10,000 account, our recommendation would be about 4, probably 5 contracts at most, even though the broker will allow for just a $500 margin. So in theory, with a $10,000 account, you could actually trade 20 contracts, but that's highly leveraged, and it's just not really what you want to do. Um, because there's a lot of leverage in futures trading anyway. It looks like we might get stopped here on this, which would be, well, it would turn into a net break-even trade, but maybe it may. I mean, we are expecting this area to be good resistance, so maybe we can get lucky and it'll turn around here and get back in our favor. Worst case scenario, though, at this point is if it does pop up and hit 1266.25, we will have, in essence, a break-even trade, because we've already made 3 ticks on 2 contracts. We've got 2 contracts left, and if we get stopped at 66.25, that would cost us 3 ticks each, which is the equivalent of what we made on the first half of the position. So, but just getting back to the idea of the amount of margin and so forth, is that the overnight margin to hold a contract, I think these days is around $3,500. Most of the time, the day trading margin is about $500. So, with a modest, $5,000 or $10,000 account, you can still trade, really as much as you think you can manage comfortably. Obviously, when you're trading futures, it's it's an endeavor where your risk capital um, is really something that you're using. That if you should lose it, it's it's not going to kill you, sort of thing, financially. You're not going to be in a situation where you can't put food on the table, that sort of idea. Obviously, with trading futures, you want to put up capital that you can afford to risk, and that if you did lose it, it would not change your lifestyle in any way. So that's sort of my take on the kind of money you want to put into the market. Not that it's the kind of money um, you want to lose. You never want to lose, but you don't want to be fearful of losing it. That's a terrible, scared mindset to get into when you're trading. But be willing to accept the risk because you've done your study and you know what the potential rewards are. So just some clues there as far as managing these trades. So it looks like it's okay. I just went ahead and restarted. I just paused it there for a moment and advanced it so we could, because it wasn't really doing anything. Now it's hit our second target, so you can see our stop has come down to 65.50, and that's good, because worst case scenario now you can see we haven't yet been filled, and hopefully we will get filled on this. But if the market were to rally right now, it would rally up to break even on the second half of the position, so we would just make profits on the first half of the position. So hopefully we'll get filled here. Okay, there we go. Okay, so we have just made 6 ticks on one contract, plus we made 3 ticks on 2 other contracts. So we've got a total of 12 ticks so far, and we have a break even on the final partial. What I usually do at this time is cancel the automated trade management feature within Ninja that we've just been watching that automatically adjusts our stops and so forth. And I'm instead going to put in a manual order. And so I've manually put in a buy stop at the entry price for our final 1/4 contract. And because I think there's pretty good potential to the downside today, we're going to go ahead and let this run, and we'll make the adjustments according to what the software is telling us. Okay, so here we are. We've just formed a selling blue bar, and I'll make a note of the height of that, and I will place my protected buy stop 2 ticks above the high of that selling blue bar. I'm going to continue to monitor the market here, and if there are more selling paint bars that come in, I will then go ahead and lower my protective buy stop to 2 ticks above the high of that bar. Okay, well, this is good. The market is continuing to drop here, so that's nice to see. Okay, we've got another blue bar. You can see it has formed during the minute. This minute hasn't finished yet. You can see, by the way, that time remaining at the bottom of the chart there, that's just a bar timer feature that Ninja has. You can use it or not use it. I'm using it in this case because it counts down 60 seconds, which is the duration of each bar. So I know that in 13, 12, 10 seconds or so, I'm going to go ahead and adjust my stop again. So I'm sort of ahead of the ball game kind of thing, that I know as soon as this bar closes, I'm going to go ahead and adjust my stop. So I can see here on this bar the highs at 62.75. So 2 ticks above that would take it to 1263.25. So I'm just going to lower my protective buy stop down there. And so now we've actually locked in 2.25 points, because even if the market were to rally now, we would still do no worse than a 2.25 point gain on the final 1/4 of our position. We've already made 12 ticks on this trade, which is 3 points. So see if we can. We already locked in another 3 here, 3.25. So this is turning out to be a pretty nice trade. On the entry price up there where it says 1 with the red background, you can see the 375, 350 just to the left of that changing as the market fluctuates up and down, and that's the current status of the position right now. So we've been in this trade a little while, and it's good to see it just keep going down like this. It's a good opportunity to see how we use our software to help us manage these trades beyond just when the trade is set up and all the requirements have been met, and then the actual trade being shown right on the chart. So this is sort of the other end of it, if you will. Once you're into the trade, obviously you want to try and manage that as best you can, and so with our trade management protocol, it seems to work pretty well. So we just go ahead and use our software, have set objectives 1 and 2, and let the final partial position move on its own. I think what I'll do here is just pause this for a moment, and then we'll get back to it shortly. Okay, you can just see that we've got another selling bar here. 62 even is the high of that bar, so I'm going to lower my stop once again down to 62.50. So we're short from 65.50. If the market should rally now and stop us out at 62.50, then we make 3 points on that final partial. So hopefully the market gets looking pretty good. We're hoping that we'd be able to catch a nice downdraft today. That was really our preference going into the day, because of course we had the intraday bias as being down. So when we do have a directional bias on an intraday or day-to-day basis, we like to see if the market with our software will set us up into a short trade to be in sync on the daytime frame with our trade and the intraday directional bias that we make an analysis of each day. Okay, it's just sold off again there, and I'm going to move my stop. 60.75 is the high of that blue bar, so I'm going to lower my stop down here to 61.25. So if the market should rally now, we're going to lock in 4.25 points. So we'll just give it a little bit of time here. So our first two objectives, when they're met, we make a total of 6 ticks, which is 3 points, which is $150. So this would be, even if we get stopped here and make 4.25, that would be a total of 7.25. So that would be 362.50 on this particular trade. And we've been in this trade for, gosh, about 30 minutes almost. Yeah, somewhere in that neighborhood. So I've, even though this video itself is only showing about 16, I paused it a couple times there while it was just kind of going sideways. So I might have to, we'll give this bar maybe another bar or two and then maybe pause it again. We'll just see how we're doing on this particular trade. But looks like it might have a bit of a bounce here, but anyway, that's how we like to manage the trades. We're using our software to help us know exactly when and at what price to change our stop to. So it's not just a basic trailing stop. Okay, there we just got stopped out. So 4.25 points on the final partial with 3 additional points. So 7.25 points, 362.50 on that particular trade. So thanks for watching. I hope this gives you an idea of how we manage the trades and how they look on the chart. So that'll be it for now. Thanks. See you soon.